what is amazing is it's taken up until I think the yuan became Basel III compliant, and suddenly the only central bank not Basel III compliant is the U.S. Treasury. The Fed is the only central bank that still hasn't got on board, and will obviously be forced to revalue gold at some point very soon. The price is being determined outside. So suddenly we're seeing this sort of where the cartel operated, where the Fed operated, was in this siloed world of the COMEX. And suddenly they've become price takers, not price makers.
For decades, gold was confined to a paper-driven casino where volatility was engineered and prices were dictated by derivatives. Now, that system is breaking down, and a physical market is emerging with the strength to set its own price. Andrew Maguire, a veteran precious metals trader and market analyst, has long been known for exposing structural imbalances in the gold and silver markets. His perspective highlights the shift from a synthetic, paper-dominated system to one increasingly grounded in physical demand. He notes that while Europe and Asia never lost their appetite for gold, accumulating steadily and often reaching record highs in local currencies long before dollar weakness, the US has historically lagged. Much of this stems from the design of COMEX in the 1970s, which prioritized derivative trading and volatility, discouraging average investors from viewing gold as a core asset. For decades, the paper market dictated prices that bore little resemblance to underlying physical demand. That dynamic is now unraveling. Basel III regulations and the rise of physical exchanges requiring real allocation before resale have weakened the old system. Attempts to suppress prices through paper selling are consistently absorbed by strong physical buying, draining liquidity from COMEX and shifting price discovery into the real market. Maguire stresses that if U.S. investors who remain underexposed to gold begin recognizing this transition, even a modest reallocation could unleash enormous capital flows into physical metals, accelerating the end of the paper era and cementing gold and silver's role in the next phase of the financial system. If you found this video helpful, don't forget to like, share, and subscribe to stay updated. We'll continue delivering sharp insights and expert perspectives on the forces driving gold, silver, and the broader financial landscape. Thanks for watching.
No, that's really interesting, and it's amazing how that all interconnects. And I think there's so much to pick up on there. And essentially, it's really interesting to find out what's happening your side of the pond, because really, when we look at the markets here and in Europe and in Asia, it's never stopped. People have never stopped buying. And so, and you only have to look at every single other currency. They were way, way ahead of the dollar rise. They were making all-time highs a long time ago. And because people were, and especially if you're from Germany and your parents and your grandparents have told you, instilled in you, hey, there was a time when you needed a wheelbarrow of money, of what they called money, to buy a loaf of bread. I mean, so talking about hyperinflation. So really, the average German actually has been saving for, decades. Since then, a little bit of their money on their paycheck goes automatically into a gold savings account. It's government sort of sanctioned, and it's been going on for years. So it's really interesting to see, because I think it's so understandable when people look at the gold market, and you've just described very well the confusion and there's a lack of, well, I don't really understand gold. That's because, as the WikiLeaks leak confirmed back in before the COMEX was launched in 1994, let's create a market that's going to have volatility. Let's create uncertainty. Let's keep people out of gold. And we've seen 50 odd years of a market that was really a synthetic derivative market, had no resemblance to the real markets. And suddenly what's happened is, and what is amazing, is it's taken up until I think the yuan became Basel III compliant, and suddenly the only central bank not Basel III compliant is the U.S. Treasury. What the Fed is the only central bank that still hasn't got on board, and will obviously be forced to revalue gold at some point very soon. But what it's doing is suddenly we talk about getting overbought. Yeah, that's old hat. Yeah, overbought in what sense? The paper market's overbought? No, it's not. Because when you suddenly weigh up that the price is being set outside of the paper markets and is liquid enough to actually discern a real physical price where I first have to own that bar, ascribed to me before I can put it up for sale, as opposed to just putting like 4% of skin in the game and playing some ludicrous game with everyone gaming me. And it's like the casino. Well, you're going to win 5% of the time and the house is going to win 95% of the time. That's gone. The price is being determined outside. So suddenly we're seeing this sort of where the cartel operated, where the Fed operated, was in this siloed world of the COMEX. And suddenly they've become price takers, not price makers. And I think it's so interesting now that you mentioned that the retail market is starting to wake up, because what they're seeing is a distinct lack of 50 years of volatility when you get massive smashes, because every time they try and sell it off, there's a buyer down there and it's taking it out of the COMEX and it's draining all that paper market liquidity into physical exchanges. So it's really interesting that you talk about they're only just starting to wake up. Where do you think, I mean, you've been exposed to the physical markets in America for a long, long time. You're also involved with sound money movements. Where do you see it? Because traditionally, Americans have had so little exposure to gold. What's the potential here if they all start waking up to it? What do you see as a percentage, as the potential?
Andrew Maguire said that what we're seeing now is a historic inflection point. Institutions are finally waking up, moving into physical hedges, and beginning to acknowledge gold and silver as real money once again. Yet the true power doesn't rest with them, it rests with us, the retail side. Through initiatives like the Sound Money movement, progress is already happening state by state, but this moment calls for individual action. Ordinary people have the chance to exchange depreciating fiat for tangible assets, and collectively, that shift can carry enormous weight. At the same time, the global landscape underscores the urgency. Central banks are stepping away from U.S. treasuries and moving into gold, with even pension funds and major financial institutions advocating the same. The market has spoken. Paper gold no longer holds credibility. Physical is the only form that matters. And with every fiat currency in history eventually failing, the math ensures this system will too. That leaves one clear path forward: gold and silver. The choice is individual, but the impact is collective. The window is open now, but it won't remain forever. Action, not hesitation, is the answer. Let's get back to the interview.
What I'm hearing here, and I think is an action call for each and every one of us, because while we've been working, you and I, and many of us have been working with the institutional side of things, and they've come on board, they're starting to buy, starting to get sticky, buy legitimate hedges, physical hedges, and that kind of stuff. What we're saying here is the retail side. The power lays within each and every one of us. So what we've just described is what better time is there for everyone listening to this episode to go out and exchange some depreciation dollars, pounds, euros, yen, whatever it is, for physical gold and silver, because the game has changed. And so the power now lays within us. The retail side hasn't caught on yet, but you can, as you just said, everyone buys 1 ounce of silver, 1 ounce of gold. The power lays with us. So speak to all your friends, speak to your family, speak to everyone. I mean, and you're doing a lot of good work with for the Sound Money movement which is state by state by state, bringing a lot of the kind of people we're talking about here to actually use money, gold and silver as money. This is a huge inflection point. What better time is there to be involved? I mean, who's left to buy US Treasury debt? I mean, it already we're seeing every other global central bank, Asian central bank, even the Bank of International Settlements has gone long gold. I mean, and we see Swiss pension funds talking about, look, openly saying, well, why don't we divest some US Treasuries into gold? We see the head of UBS saying, yeah, really suggest that people do swap some US Treasuries into physical gold. I mean, and it's physical gold. Then no one wants to touch the paper stuff, because if you're dumping one paper instrument for another, you've gained nothing. So this is so interesting. And what I hear from you is, look, guys, this is an action point. This is our action point. Listen to what we're saying. Listen to what Bob Roberts saying here. You have a window of opportunity to actually take responsibility, each and every one of us, for ourselves individually, but collectively. We have the solution. And when mathematically it will fail, the system you're talking about has to fail. Every fiat currency has failed. So you need an alternative. What is it? There is only one alternative to you. And largely it's gold and silver. And there are other things that you could look at too. But that's incredible. I think that's what I'm hearing from you, Robert, is do something about it.
The trajectory of gold and silver has shifted from decades of paper-driven manipulation to a new era where physical markets are setting the tone. Institutional players are steadily moving into real hedges, but the true strength lies with individuals who have the power to collectively reshape the system. With central banks reducing exposure to US Treasuries and reallocating into gold, alongside pension funds and major institutions openly advocating the same, the global direction is unmistakable. Confidence in fiat debt is eroding, and tangible assets are reclaiming their role as stores of value. Every fiat currency in history has ultimately failed, and the mathematics behind the current system guarantees the same outcome in time. That reality leaves only one viable alternative: gold and silver. The opportunity now rests in the hands of individuals and communities willing to act, exchanging depreciating paper for enduring value. By doing so, not only is personal wealth safeguarded, but the collective action becomes a catalyst for systemic change. The moment is here, the window is open, and the choice to seize it will determine who is positioned on the right side of history. How much collective impact could retail investors have on the global financial system if even a small percentage shifted from fiat and paper assets into physical gold and silver? Stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.